I'm hanging out on First Avenue in Atlantic Highlands with my good friend Lisa English from O'Brien Realty. I love this office. It's pretty, it's open, it's quiet. You can walk in if you want to buy a house and Lisa will greet you. But other than that, you can find her on all of the socials. This is our round 2. So I decided to come to this office because I want to go to Julio's across the street and get pizza for lunch when we're done with this conversation. But I just love getting our real estate market updates to know exactly what's going on out there here at the Jersey Shore, here in Atlantic Highlands, in and around the lowlands of the Highlands and everything else in between. How are you?
I'm great.
How are the kids?
The kids are wonderful.
That's awesome.
Yeah, we had a great Mother's Day. It was fun.
Nice. How's that wonderful husband of yours?
He's still wonderful.
He's still wonderful?
Yes.
Quinn, you hear that?
Still wonderful.
Still wonderful. A shout out. You know, she can't take it away because now it's going to be memorialized on YouTube.
That's right. You could replay this.
So what's going on in your world? What's new and exciting?
New and exciting is we live down in Shark River Hills now, but I still come up here all the time. Most of my business is in Monmouth County in this area. Aside from that, just kind of riding the tide of the real estate market.
Where is this tide for you right now?
The tide is really here locally. Like I've been doing a lot. The tide has come back. So it went away, and then now I'm having a great year.
Awesome.
So last year was a little quiet for me, but I was just saying, like, for other agents, it was not.
Right.
But I would say we're at a still appreciating market. We're still seeing bidding wars. I think every single listing or buyer that I've had has been a bidding war, aside from one in an adult community, which is kind of insulated from that world. But yeah, we're still seeing bidding wars. We're still seeing appreciation. The amount of houses on the market is unfortunately down about 13%, which makes it even harder for like everybody to get in the market.
I just can't believe that there's still bidding wars at
every single one.
At the interest rate environment we're in right now. You know, and I got lucky because I accidentally bought a new house last fall.
It was a good accident.
Much lower interest rate than is today. And like, I wouldn't be able to afford my house if I was paying 6.5% right now.
Yeah.
It would price me out. But I know I can sell my house for probably another $300,000 than what I paid for it. So I think about it, but I'm not going to do it.
Or pull out the equity and buy an investment property or do something else.
But the interest rates will screw me on pulling out the equity. So
unless your cash flow makes sense.
All right, so I guess we have to have another conversation because that's tempting. But, you know, I don't know if I want to make my mortgage payment go up any higher than it is. But, you know, if there's additional cash flow. So tell me, let's dive into that, right? So if you have equity because of this appreciating market and you can pull some of that equity out for a down payment plus, right, on a cash out refinance.
I think it's a great tool. I still think it's a great tool.
You always love that tool.
I always love that tool. That's my tool. Like the BRRRR method of like buy, rehab, rent, you know, refinance or whatever it is. And even with your primary home, this is the great thing about it is that you have leverage to pull out a large sum of money.
Right.
You know, hundreds of thousands of dollars sometimes, and use that to make you more money. So yes, your payment may go up on your mortgage, but as long as your cash flow is covering the expense of that investment property and giving you a little extra, you're still coming out ahead. So you could still cover that new, you know, balance on your primary mortgage and be making money if you make the right investment.
So making the right investment, that's the trick, right? So where are we finding these houses in such a low interest rate environment, in such a low inventory environment, right? With, I mean, rents are high, which is great also, but the inventory is low. So then we're competing on these investment properties, and are we overpaying, or because the market's still appreciating, keep talking through this?
Yeah. So I'm sure all of us who thought, oh, I really should have bought that house 4 years ago, you know, that is going to continue forward until the end of time, in my opinion. And even if we have a softening or a small crash, which I really don't see coming, maybe a softening eventually, but right now we're not seeing that. And people who were in the market 2 years ago, before that 18 to 20% appreciation that happened over COVID, now they're like, oh, I should have bought that house at 500 with 4% mortgage rate. And now I'm kicking myself because now that same house is like 600 at a 7%. So I think you're always going to be chasing that next value as long as it makes sense from a finance perspective and your cash flow. I don't see a downside because you're getting the benefit now. And then the real winner for me personally and what I invest in, and everybody's different. Everybody has different reasons for investing. It could be, tax incentives. It could be cash flow. It could be future value. I'm like a future value appraisal, like the appreciation going up. And in 14 years, when June's ready, my daughter June is ready to go to college. I mean, we talked about this, or go travel the world, or go to culinary school. She has all this appreciation on this house that was bought 18 years ago to cash out. And that is an amazing tool. Just the wealth you can build with that, I think, is so underrated.
So now how many, you have 2 investment properties right now, or you have 3?
I have 2 single family home investments.
Okay.
But one in Keyport, one in North Middletown.
Okay.
And then I have a 4-family that I've partnered with friends in Belmar Beach Block. That's more of our summer rental Airbnb. And then I have a farm down south, and I have land here in Atlantic Highlands that is doing nothing yet. And then some other land holdings.
I didn't know about the farm.
Yeah.
That's an interesting one.
That is an interesting one.
What's being farmed?
Soybeans, from what I understand, but that could change. That could change with the growing market and emerging markets. I'm always about emerging markets. So, whether you're for it or against it, like, marijuana, right? Like that is a potential emerging market that, that land could be used for.
Right.
So hold on to it.
We're staying away from the cannabis on the insurance side because, one, I don't want to learn something new.
Yeah.
I'm just not into it. Like, there's other things I want to learn, but I just don't want to learn how to insure cannabis because it's such a niche market on the insurance side, right? Because the value of plants, from babies to grown plants, and plus the product that gets put out, there's so many variables. And then the regulations between state and federal and all the moving parts in between. I'm just like, I'll leave it to somebody else. Somebody who's really into cannabis.
Yeah.
And
we'll figure it out.
We'll figure it out. And people have figured it out. There's specialists out there that just are going to do cannabis around the country.
Yeah.
And good for them. I don't want to do it.
That's not you. Yeah. But you bring it, and that's why I love talking to you, because I would never even think of that side of it. I'm like, yeah, what's the big deal?
Well, that's what we're here for. That's why it's the insurance podcast, right? We have to talk about insurance somewhere along the way.
But that's a really great point. Like, okay, great, emerging market, but what are the caveats to that? What are the challenges? And that could be definitely one of the challenges.
So on the investment property for normal properties, right, for single families or a 4-family that's more summer, those are things that are great and easy to do, but we're seeing insurance costs rise significantly, as you've already seen probably, that premiums are going up.
Yeah.
And we're hoping by 2024, 2025, things level off. I don't think we're seeing premiums go down for quite some time. The earth is too volatile, right? That's the nicest way I've ever said that. Like, Mama Earth is not happy with us.
She ain't happy.
And, there's crazy storms. Like, we have tornadoes in New Jersey, and there's wicked tornadoes in Florida that are just as bad as the hurricanes that are ripping through. Like, it's wild what's going on. And especially with social media, now we see it all.
Yeah.
It's right in front of our face. Like, Abby and I are constantly sending each other different Instagram posts of wild weather in different places.
Yeah.
We had a house blow over in Avon.
Oh, no.
A couple of weeks ago.
Wow.
Because it was a framed building. It was not framed well.
Yeah.
Or it wasn't,
set up for hurricanes.
It wasn't set up. It wasn't ready for wind.
Yeah.
It was probably a day or two off of being secured.
Wow. That's a shame.
And that's happened quite a bit. I've seen a few of those.
Yeah.
It sucks.
Yeah.
I don't want to be in that position. I don't want to be building something and then have it blow over.
No.
Or if I do, I want to make sure I have really good insurance on it.
Yeah.
So that there's not going to be an issue. But on the investment stuff, that's getting more expensive.
Yeah.
Constantly. Right now we're going through our next reinsurance cycle where the insurance companies are buying their insurance and seeing their rates go up. So then it's going to be passed back down to the bottom line consumer, which is the investor or the homeowner.
Yeah.
So seeing a ton of that. But anyway, I derailed the insurance.
No, I think that's important though. Like, that is a big part. It's the pity, right? Like, your principal, interest, taxes, insurance, right? Like, that's always what you're looking at for your affordability if you're buying a house or for your investment property. Is there enough meat on the bone that if insurance or a homeowners association fee or taxes go up, are we going to be able to sustain it? And you always want to have that little cushion.
Insurance going up and the interest rates being higher than they have been, right? that's making that's sucking that cash flow out of there.
Yeah, it can.
But that's why you like the appreciation.
Yes.
You're looking at, I'm looking 10 years. If I can break even and pay the mortgage off,
yeah,
we're
that's
still
what I mean. You're still ahead. You're still ahead. That's why I love
so
it.
Optimistic.
I am optimistic. But honestly, it's not
Just
even
go online
like,
and find me something to buy.
It's not ungrounded optimism because
Right.
I've gone through it and I've gained from it.
Right.
We probably, it's not huge numbers, but on our 2 single family homes, and we're grossly under, pricing it because we have great tenants, and that's another thing that you want to consider. We net probably about $13,000 a year. Our summer rental, that's about $50,000 a year, because you have a lot more.
So are you seeing a lot more? Are you seeing that vacation, travel, Airbnb, short-term rental, summer rental still going higher? Seeing prices continuing to rise on that, or was last year kind of the peak? Because I know,
I think last year was a peak in some ways. Just from this year, our Belmar rental. It's mostly booked, some of them are also, but the summer rentals, where people were coming for the whole summer, that was less.
Right.
I didn't get that many inquiries for the entire summer, which I was shocked about. But I think during, again, COVID time, the first year, everybody wanted to go away locally.
Right.
They couldn't go anywhere international. They couldn't go on the big trips that they were doing. So they were willing to do things more locally. I think because people then started to buy these second homes all at the same time, kind of flooded the market a little bit. The Airbnb market got a little oversaturated because everybody wanted to do it. This works. I want to do it. I want to do it. I want to do it. Yeah, let's do it. Let's do it. And also,
but anyway, keep going.
But also the appreciation. Now you're buying that second home. It's costing you more, so you got to deliver that on the side of the Airbnb tenant or the summer tenant, right? So you got to. It's a tricky one. You got to kind of make sure you're getting the deal from the upfront standpoint, which means probably mostly off-market homes. Okay. So that's how we got the Belmar place. Our partner Nick hit the streets, found the right seller at the right time, and that location has appreciated since we bought it for $600. It's now about 1.1 million. Right. So we put 200 into it. But we still have 300, 400,000 of just passive appreciation.
And your plan is to continue to cash flow that.
Yeah. And potentially pull it out.
Would you 1031 it, or would you look to?
I don't know. Well, it's a group project, so I don't want to speak for everybody's interest.
We're hypothetically
we talk about everything. We talk about every scenario we could possibly do.
Right.
It's all on the table, and that's what I love about when you hold real estate. Everything is on the table.
Right.
You can kind of decide when the right time is.
When the next opportunity arises.
Exactly.
Then
do we want to get rid of this? Do we want to just leverage the equity? So it's an ongoing conversation.
Cash flow. I feel like we're talking about what's his name that's all over TV. I'm drawing. Grant Cardone. I think we're cash flow. All about cash flow, right? 10x it and continue to grow it.
Yeah.
So if somebody else wants to get into the investment space, right? They're listening to this conversation. If they've gotten past minute 2, and they want to dive into, okay, how do I leverage the equity in my primary home?
Yeah.
Right. We're forgetting about people trying to buy primary homes right now because that's a little bit easier. But so somebody wanting to leverage their primary home and then get into a potential investment to create that cash flow. Let's talk about the process for that.
The process is first to understand what your home is worth. That's where a real estate agent comes in, or an appraiser.
Okay.
I would go with the agent first and just get an idea from a comparative market analysis. Well, where is my house right now in this market? Okay, well, here's what I owe. And getting those figures first, I've got a good 300, 400. What do I need to buy a whatever product? And remembering that on a second home, you do need 25% down. So doing that math and then figuring out, well, where can I buy something that makes sense with that amount of cash that I have available?
Evan Beach is going to be watching. He's like, oh, why wasn't I part of that conversation?
Evan has done many of our mortgages, so he's a great resource. He will be mad, though. Sorry, Evan.
I'm going to challenge him to see if he actually makes it this far in the conversation, because then he's going to be...
If he got name dropped.
He's going to be itching for this. So that the real estate agent is key.
Yeah.
And then having the right lender
Totally.
on your side is also important, right? So assembling your team, I think, is a great way to put it. So a good mortgage lender right now is going to be like, get your pre-approval before you talk to your realtor, right? So know what you can buy before you go out shopping for it, especially in the market that we're in right now.
Yeah.
You can't go shopping first and then try to figure it out later. You're too late to the game at that point. So having those pre-approvals and understanding the money of what you can buy, is important too. So assembling that team is great. Insurance guy, part of the team also.
Yep.
Usually the last guy on many of the teams, but that's okay. I don't take offense. But most important, when something goes awry, I then go to the top of the list at that point. Who else needs to be on that team, right? So we've got you. We've got a great lender.
Insurance. I would say a real estate attorney. I would say definitely an accountant. Like there's so many things you don't know about that can come into play. Right. And I'm not an accountant, so I'm not going to give my, CPA. I'm not going to give my opinion on it. But talk to someone who actually knows, or even a financial advisor.
Right.
Like if that's someone that's, on your team already, bring them over to this discussion.
Right.
You probably know everyone you need. And then bring them into the conversation. What makes sense? What can I do? What is,
The accountant's good because there's different conversations that you can have with the accountant, right? About, if you're going to get into the depreciation conversation plus cash flow and taxes and everything else in between. And, what expenses can I write off and what expenses can I not write off, right? So there's a lot of moving parts when it comes to that. And then the attorney is, should we keep it in our personal names? I prefer not. Put it in an LLC. Separate it and treat it like a business.
Yeah.
Right? Like I'm a big fan of, if you're trying to make money on this, let's treat it as a business to the best of our abilities, separate it out. As long as you're not living there, it's easy enough to get insurance on a property in an LLC. It's not an issue. The money side sometimes is a little bit different in an LLC versus personal name, right? Just because of, different technicalities with lending. Mm-hmm. But I still think treat it as a business.
Treat
Protect
it as
yourself.
business.
Because that's what it is.
It is at the end of the day. It's fun. It feels like
if you have good tenants. I have a not good tenant right now that we've been trying to evict for 2 years.
Oh.
And I'm not going to go any further than that. But it's miserable to the point where we'd rather just bring a bulldozer to the house and take the whole thing down while they're living there. But anyway.
We have great tenants. And that,
And that's the key to it, right?
The
real success comes with having good tenants that are going to take care of your property.
Yes.
That are going to help maintain it. And, and just be there, and paying the rent is great, but taking care of the property is paramount.
Yeah. I want someone who's going to take care of it and improve it potentially and stay for a long time.
Right.
Both my renters have been there several years, and I probably could charge one about $500 more a month, and I could probably charge the other one about $300 to $400 more. So that's a lot of money in our pocket that we're losing. It's about, we could double our profit potentially. Right. But, the expense of vacancy rates, the expense of destruction to your property, the expense of getting phone calls from the town, it's just not worth it for us.
Turnover and trust is very expensive, right?
Yeah.
So if you have somebody that you're trusting, they get a break.
Yeah, for sure. 100%.
So it's great. It's exciting. I can't wait to go look up some new properties right now.
By our next conversation, you will have purchased something.
I hope not. I don't want to do more work. But I guess that's what I've got you for, right?
Yeah, I'm happy to look. We're
going to go shopping, and then we're going to report back if we decide to put some offers on the table on a new investment property for me. So Lisa, it was great to connect.
Always.
Thanks for hosting me at the office. Let's go get a piece of pizza at Julio's, and we'll see where this takes us.
All right. It might be at Pickle Pizza. You have to have that if you go to Julio's.
See you later.
Bye.